In this trading idea from tradingideas101.com, I want to talk a little bit about the S&P along for the ride trade. That is a trade idea we've used for many years. The basic premise, I'll do another video specifically on that, and I think I have it somewhere on this YouTube channel. But the idea is take a look at where the S&P is, not the futures, but I have the chart of the futures up today. But take a look at where the S&P is at 10 a.m. Each day, and if it's up at least 15 points, you have a potential to have a buy trade in the S&P. And if it's down at least 15 points, you have potential to have a down trade. Now, the up trades are far better than the down trades. I'm going to actually show down trades today, but the reason I'm going to show them is because of this new kind of trade idea that you might be able to use, and I'll show some examples of it. But the idea is if it's up, say it's down 15 points in this example that I'm going to give you here in a moment, you want it to prove that it actually does. So you'll see tops and bottoms of the markets in that 952 to 1010 range. So we want to make sure that it's not just a false breakout type of situation. So we want some confirmation. And once we have some confirmation after 10:10 a.m., then we'll go in that direction. So if it's up 15 points at 10 a.m. and then it continues to go higher, after that, after 10:10, we'll buy it, and same for the reverse. So, but I want to show you things to look out for. So that system for 2022, I think on the upside was 70% plus winners. But one of the things you want to watch out for is when it breaks the highs by like a minute, and we're going to show you a couple of examples because this has happened really recently. So I wanted to show you that here. So that is what I'm going to do. Let me get it set here. So we are looking at so this is again the micro S&P. Again, we base it on the S&P index itself, not the futures, but I wanted to show it this way. But this is a 15-minute chart. We're looking at February 14th, the close, which is right around 41.46, as you see it up there. And then at 10 a.m., which is right here, you have 41, we'll call it 41.21 as the price. So the difference between the close was 41.46 and the 10 a.m. price on the 15th was 21. So that's a difference of 25 points. So we're down 25 points in the S&P. So if we're looking at this at 10 a.m. on the 15th of February, we're down roughly 25 points. So that's potential for an S&P along for the ride. Trade to the downside. Again, the downside I wouldn't just blindly take. The downside trades don't work as well. The upsides do, but in this example, what I want to talk about is the break. So what I have here is in my notes of this particular trade is it broke the lows for about a minute at 10:13. So what we're going to do is drop this down to a 1-minute chart. So here's the same chart, just in 1-minute form. So this is the open. We came down, 955 bar, and then the 10:13. So what we would have been doing is looking for it to break this area here, this bar here, to the downside. And once we get a confirmation after 10:10, we'd be looking to short it. But a lot of times what happens is it will just take this out and reverse really quickly. And when it is, say, a minute, it only stays there less than a minute. Again, this is a 1-minute chart, so it didn't even stay under that horizontal line there for a minute. So this is the area right there where you'd potentially go short. It didn't even stay there for a minute. Usually that tends to be a sign that we have bottomed out. And the idea here would be for risk reward of very high. So In this particular case, if I was watching it live, I might be interested in going long here at 41.18 or 41.21, 22 or so, and have a stop below here. It depends on what you're looking for. Here, if I did it 18 and I'd have a stop, at 12 or something, about a 6-point stop, a little bigger if I did it up here. But the idea is that's going to be the low for the day. So, and if we climb it out farther, we go a little higher, go a little lower, and then at 4 o'clock, we're right here at 41.59. So our buy entry was 41.18, 40 points higher. So we had in this particular case, a risk of 6-10 points for a reward of much higher, and it never came back down to that area, and was a nice win. So you'll see that from time to time. That's not an everyday occurrence, obviously, but that in that particular case was the 15th of February. And those are ones that you can look for, especially when it's a 1-minute deal. So if it stays down there 5, 10, 15 minutes, that isn't something that I'm interested in. I want to see a really sudden reversal on that. So it got its confirmation. So sometimes it won't get its confirmation at all, but it got its confirmation in this particular case and reversed really quickly. Those tend to be very good, and your risk reward tends to be small compared to what your reward potentially is. Here's another example, happened in the same week. This is the 4 o'clock close on February 16th. So we'll call it 4100. And then if we scroll over to 10 a.m., right here. So 10 a.m. price is right about here. So say 40.62. So it's down roughly 38 points or so for the day. So what you want is you want confirmation. Now, in this particular case, the confirmation, you need it down below the low. So this is the low of the day so far, which was at 9:56 or so. So, and if we can scrolling, so we're going to put a line here. This is where it needs to get below, right here. So even though the market was at 10 o'clock, it was here, you actually need the confirmation below this particular low. So the difference is 6 points or so. In today's case, it can be much larger, but in this case, it's about 6 points. So in order for it to get confirmation that it's an S&P long for the right trade, you need it to break these areas. So if it never breaks it, it's a no trade, and you wouldn't be interested in it. But anyway, if we keep scrolling here, it breaks it at the 1133 bar, and you can see this is a 1-minute chart again. It doesn't even stay below that for a minute. Tests it again the next minute. So your idea would be, okay, maybe buy here, maybe buy here, 60, 40, 60, 40, 62, something around those areas, again with a stop down here, below this a bit. And in this particular case, it came back down here if you had a little bigger stop, but you can see it never broke. In this case, I think in the minis it broke it, but in the micros it did not. But that's why you need to have a little stop a little lower. But anyway, your stop would be right below this area, and on the micros it did not break that area. It came back down here around 1 o'clock, or just before 1, and then if you exit at close, so the idea is that's going to be the low. If you exit at close is 88, so 40.88. So if your buy was at 40.60, 40.62, something around there, you made 25 points, and again you had 6-8 point stop in the S&P. So 3-4x your risk in this particular case. Now, this happens on the upside as well, but again, you want to watch for ones that are quick. And in this particular case, it was quick. It just happened to retest it again. But those are the ones you want to watch for. The previous example obviously is a little cleaner, where the whole bar was, below it and then jammed above it. And you didn't really have a retest. So you'll see those as well. But let me show you an example of the upside as well. I spoke too soon. I don't have the chart set up on an up trade. You'll see it, in my opinion, clearer because of the win rate on the upside is so much better. 70% or so the last couple of years for the S&P along for the ride trade. The downside doesn't work as well and I don't trade the downside on the S&P along for the ride, but I use this particular trade idea since it gives good risk reward. You will see these for the downside. So obviously in this case, you're reversing and buying it. But you'll see these, once or twice a month. In this particular case, we had 2 in the same week. There were also other ones earlier this year. Lastly, I like to see the break happen fairly early, the more time that you have for the market to reverse, the better. So prefer before 12, but usually in the sweet spot before 11. Again, you're not going to get a ton of trades on this, but when you do, it does offer some good risk reward. So study it and see if it's for you. Have a great trading day. Take care.